One of the most powerful ways that seniors can safeguard their Medicare coverage is something that's often overlooked. The right coverage, along with your Medicare plan, can help safeguard you against potential out of pocket costs. If this is overlooked, you could end up with unexpected bills that can sometimes be in excess of $2,000, even up to your plan's out of pocket max on your Medicare coverage, which could be thousands of dollars. So I want to review how Medicare works, your options for coverage with Medicare, and the different ways that you could structure coverage. So let's just go to the three ways that you can take your Medicare benefits, right? So number one is going to be original Medicare. So let's review just how original Medicare works. Okay, so if you have original Medicare, you're going to have two parts. Part A, okay, you're going to have a 1718 deductible. Okay, that's a per admission deductible for a hospital stay. Because remember, Part A covers inpatient services as well as skilled nursing. So now, once I've used 60 days of lifetime care, for days 61 to 90, I'm going to have a daily copay in addition to this deductible. That's $434 a day. And once I've used 90 days, days 91 to 150, I'm going to have double this amount, which is $868 a day for my copay. So you can see how multiple hospital stays with just original Medicare Part A can start to stack up. Medicare Part B, again, covers outpatient services and physician services. So the way the coverage would work if you just had original Medicare and Part B, with Part B, you're going to have a $283 Part B deductible. So I go to the doctor. I don't pay anything right then and there at the doctor's office. The doctor's going to submit the claim to Medicare. Medicare is going to tell me and the doctor what the Medicare allowed amount is. I'm going to get a bill in the mail for that amount. I'm going to get these bills until they add up to $283. So once I hit 283, I've then satisfied my Part B deductible. And then I am going to pay 20% after that deductible. Okay, so 20% after that deductible, there's no limit on what that potential exposure could be. So the times when you see that becoming excessive could be, outpatient surgery, or more importantly, if you need what's called a Part B drug. So these are drugs administered in the doctor's office or at an infusion center. Typically, you'll see this with chemotherapy is the most common example, but it could also be things like digestive disorders, right, where somebody has to get Remicade, or some of these infusions other than chemo, then they're very expensive. No cap on this Part B exposure. Additionally, with Part A, there is skilled nursing as well. So the first 20 days of skilled nursing, you're not going to pay anything. But then days 21 to 100 for skilled nursing, you're going to have a daily copay, $217 a day. And those are days 21 through 100. Now, if your skilled nursing stay, this isn't very common, but if the skilled nursing stay exceeds 100 days, then there's no coverage for that because Medicare doesn't cover beyond 100 days. So this is kind of what your coverage looks like just with original Medicare. There's not a limit on what your costs could be. Original Medicare is just going to cover 150 lifetime days if we were born in the hospital. And then here's the Part B coverage, right? So there's some potentially pretty large gaps, right? So let's go down to number two, Medicare with Medicare supplement and Part D drug. But one thing on the cost here, just go back, Part A, oftentimes you're not going to have a cost because if you worked 40 quarters, right, for 10 years essentially, and you paid into Medicare tax, there's no premium for Part A. For Part B, your standard premium is going to be $202. a month. This may be higher depending on what your income was 2 years prior. There's an income related monthly adjustment amount that they could apply to the premium that would then make it more expensive as well. So this is your standard cost with original Medicare, okay, $202. So the other option is you can get original Medicare with a Medicare supplement. Okay, let's say you have original Medicare with a Medicare supplement and a Part D drug plan. With original Medicare, you have a cost of it's actually 202.90, 90 cents there, but 202.90. Okay, now Medicare supplement, original Medicare is going to be the primary payer, right? So you go to the doctor, you give the doctor Medicare card, and you give the doctor the secondary insurance card. When you have a Medicare supplement, there's no network. So oftentimes people say, well, I have to check if my doctor takes the plan. Well, that's not the case when you have a Medicare supplement, because the supplemental plan is going to pay off the Medicare approved schedule and for those providers that accept payment from Medicare. So you don't have to worry about networks. Typically, people may choose, the Plan G and Plan N, the most popular supplements. They could range, depending on where you live, anywhere from, say, $90 to $170. Okay, so let's just take an average. Let's just say $130. And then you get a drug plan. Right, so the national average drug plan premium is about, let's say it's $35. Because remember, original Medicare doesn't cover prescriptions, right? So you can get a separate Part D drug plan, which would cover prescription costs. So let's say somebody's 65, they're going this route. That costs, you're looking at around like $350, right? Now, if this is an affordable option, it does provide very good coverage. A lot of times you don't have to deal with the insurance company kind of managing the benefits and becoming the primary payer, which is what you see with Medicare Advantage. But oftentimes people will choose Medicare Advantage because they're attracted to the premium and it's just more affordable for them, right? But we do recommend this option quite often. It's really based on the consumer's risk tolerance, budget, and how they want to access care, right? Because with a Medicare supplement, basically what's happening is these costs that we have mentioned with original Medicare. So the Medicare supplement is covering this, it's covering the copays. So you don't have any inpatient costs for Medicare supplement. It'll actually add another year to that 150 lifetime daily allotment from original Medicare. The other thing that Medicare supplements are going to cover, most of them are going to cover that skilled nursing copay as well for days 21 through 100. So pretty comprehensive coverage on the inpatient cost. For Part B, again, different supplemental plans, different benefit amounts, of course, different benefit structures. If you're eligible for Medicare and you're 65 after 2020, you're going to have a supplemental plan that has a deductible. Some of those plans are going to cover all of this at 20%. Some of them will limit this to $20 at the doctor, $50 at the ER. That's like a Plan N, right? So pretty comprehensive coverage for this price point, $350, right? Now the third option here is Part C or Advantage. So when you have Part C or Advantage, you still have to pay for original Medicare. So let's say $202.90. Now, a lot of these Medicare Advantage plans, they'll include the medical, the prescription, the dental, and vision all in one plan. And their costs, generally see those plans anywhere from like $0 to $35, right? So they're pretty affordable. Oftentimes people are attracted to that lower price point, but they are pay as you go, right? So as you use the plan, you have copays instead of paying a monthly premium, right? And you have a network. So the area in which you live greatly determines how expansive that network is, how you can access care. Some areas have very, very good Medicare Advantage networks. Some areas, more rural areas, rural states, where your health system may be across the state border, they may be a little more restrictive. So sometimes you hear people say, oh, don't get an Advantage plan, don't do this or don't do that. A lot of times they're giving you that recommendation through a, a viewpoint that might not be accurate from where you are and what your situation is. So it's an important thing to keep in mind. But again, generally speaking, lower cost, you would have pay as you go, out of pocket maximums on the Advantage plans uh, tend to be higher, right? So typically you may see out of pocket maximums up to around $9,500. Okay, this is medical max out of pocket. And then it's important to note that the doesn't include prescriptions, but prescriptions are going to have a separate prescription drug max out of pocket of 2,100 for the 2026 plan year. So if you're hitting both of these, I mean, it could be excessive. You could be looking at $11,600 potentially. Now there are some Advantage plans that have much lower max out of pockets, like 3,500, 7,500. It's usually up to around this, right? So potential uh, times where your copays could be a little bit higher, right? Hospital stays typically maybe looking at 250, excuse me, or $400 a day in the hospital. Again, this is dependent on the plan. They all different benefit structures, right? But this is typically where you could see this, and that may last for, like, let's say 6 to 7 days. Again, depending on the plan, right? So I'm going to say 400 for 6 days. Copays, times you have copays. Oftentimes on a lot of these Advantage plans, there's no copays at the family doctor. You may see copays at a specialist that range from $30 to $60, depending on the plan that you have. Those are going to be a little bit different. So you'll see a lot of the PPO plans this year, they'll have higher copays because it costs the insurance company more to administer a larger national network where there's no referrals. A lot of the HMO plans, some of them don't require referrals and some do. Again, depends on your area and what's available. Here's what you typically see higher copays would be complex imaging, MRIs, CAT scans. Those times you can see copays range up to $200 to $500, depending on the plan. Outpatient surgeries, a lot of times you'll see a higher copay for outpatient surgeries. If you go to an ambulatory surgical center, typically the copay is less than if you have the surgery in the hospital, but still could be quite high. Some of these plans do have deductibles, medical deductibles. Medical deductibles typically something that you could have to meet before you have copays. And again, it depends on the area and the plan. A lot of plans don't have this, but it is something you could see that would count towards the max out of pocket. Part B drugs. So this is a big one. The Part B drugs, when we were going over that 20% coinsurance, this is kind of all these Medicare Advantage plans. You're going to see this 20% up to the max out of pocket for things like chemotherapy or any kind of infusion that's administered in a doctor's office or an outpatient setting. You'll see that. Skilled nursing, typically you'll see most Medicare Advantage plans kind of follow that Part A structure, where days 1 to 20, there's no copay. Days 21 through 100, typically you're going to have it could be $200 a day, or it could just be that 217, like original Medicare. So we tend to tell folks the big three, right, are hospital, RV drugs, and skilled nursing. Those are the times where you could get closer to your out-of-pocket max, or in the case of Part B drugs, if you need chemo, hit this out-of-pocket max, right? So there's some different things that people can do to kind of safeguard against this potential exposure with an Advantage plan, okay? So again, let's say I have $250 a day for 7 days. The average hospital stay is 2 to 3 days typically, but let's say I'm in there 7 days, that's going to be $1,500. Okay. Most seniors, they can have a problem if the out of pocket is over $2,000, right? Part B drugs, and then again, this is going to be like chemo at 20%. If I have a 9,500 max out of pocket, I'm going to hit that, right? Again, that's something that could be a time where you could spend the most. And then again, the skilled nursing. So skilled nursing, if I have the skilled nursing stay for 60 days, I could get very close to this now. 60 days, that maybe obviously that's less common, but it's just an example, because now I'm looking at, I'm getting close to this number at 60 days, 60 times 217, well, $8,000 there. Okay. So there are plans. Usually you can get an ancillary plan. Sometimes you hear it called a hospital rider, a hospital indemnity. They're usually around $50 to $60 to cover these three things. And so what they do is they pay a cash benefit to the insured person. You can structure these so it kind of lines up right with the big three on these advantage plans. So you can get a benefit that'll pay $250 a day in the hospital. There's a lot of companies that do this. They'll write you a check directly, pay the $250 a day for each day you're in there to help offset the out-of-pocket exposure. Part B drugs, the most common example is chemotherapy. You can add a cancer benefit to these policies, which could pay $10,000 to help offset this out-of-pocket costs. And then oftentimes these plans, you'll have a skilled nursing rider that'll pay $200 a day, 4 days, 21 through 100. Okay. And then that will help to offset the skilled nursing exposure. There's some that you can also have it pay you the $200 a day for the first 20 days. So these are like the big three things that you can cover for around that $50 to $60 price point. Now, there's a lot of other riders, like you can get an ambulance rider, emergency room rider, outpatient surgery rider. With those, if you look at the cost of the rider oftentimes is what the copay would be if it happens once a year. So if the math doesn't work, we usually stay away from those, right? Because insurance, basically what you're trying to do is transfer risk. So you want to transfer risk where you have the highest exposure, right? Not so much for the nickel and dime copays, but really for the bigger stuff, right? So we have another video on exactly how this works here too, as well, if you want to check that out.